The dollar is king in the financial markets. Whatever happens to the dollar affects almost all the dollar associated pairs and assets. Hi folks, my name is Francis and welcome back to Carries Trading Institute. If you are a new viewer on this channel, I would like you to click the subscription button and don't forget hit the notification bell so you stay updated every time I post a video. If you stay till the end of this video, I'm going to show you what to expect on the dollar and foreign currencies in the coming year 2023. A few months ago, we predicted the dollar crash and we literally saw how the dollar went down with over 1,000 pips to the downside. So guys, let's not waste time, let's go to the video. So this is my dollar index chart. This is the USD dollar index monthly time frame. Remember, we have always been emphasizing that the higher time frames are the main drivers of the liquidity. Reason is because the institutions actually trade off the higher time frames. Okay, so you have to learn to position yourself with the higher time frame draw on liquidity. This is why I'm paying attention to the monthly, weekly and daily time frame to give me my directional bias. So as you can see, this is the dollar index monthly chart, and what we are currently seeing is the dollar in a bearish institutional order flow. Previously, the dollar traded into a sell side imbalance and a buy side inefficiency, and this is also a confluence of a mitigation block and a fair value gap. And when we see this, we know that this is a point of interest. So price traded into it and is showing rejections to the downside. Okay, now where is the dollar actually trading into? The dollar is actually repricing into a discount. If it's going to continue bullish, we need to see the dollar reprice into a discount region of this previous range of the monthly time frame. Okay, now how do you outline this range? It's to simply identify the immediate or the most recent swing points between this low and this high. I think I should do a video on how to identify swing points so that some of you who are getting confused are going to have clarity on how to pick the right swing points for your trading range. Okay, so if you are yet to watch my video on institutional reference point, I taught about 7 institutional reference points courtesy of Michael Hudson, founder of the ICT concept. I did a video on this channel. The title of the video is Order Block is Not Smart Money Concept. So I'd like you to go watch that video so you get to learn about these 7 institutional reference points, and you'll be able to catch up with the other videos and subsequent commentaries we will be making across the coming year. Okay, so the dollar has been clearing previous weekly lows. This is a sign that we are in the current bearish institutional order flow, and we see that there is a draw on liquidity to the downside. What are those draw on liquidity? We see an order block, which is an institutional reference point. We saw a pool of liquidity, which is the liquidity void here. We still see another liquidity void here. Okay, when you put a Fibonacci between this low to this high, 50% of the Fibonacci range is called equilibrium. This is that blue line we already outlined as equilibrium. Then above 50% of the Fibonacci level is called premium. So when price is in a premium, we like to sell at a premium because price is overbought. And when price is in a discount, which is below 50% of the equilibrium line, that means that price is currently in a discount, meaning that it is oversold. So we like to buy when price is oversold, or when price is low, and we sell when it is high or when it is at a premium. Okay, that's the concept. So price traded into a premium, now it is repricing into a discount range. Can price take off from 50%? Yes, it can. But we will see confirmatory signatures on time frames like the weekly and daily time frames. But I will like to see price trade into the discount below 50% of this entire range, which is this blue line. And then what are the institutional reference points residing below it? We see this sell side, this buy side imbalance I meant to say, and sell side inefficiency. I'd like to see price trade into it, and then I will start looking for longs from this point. Okay, price can go as low as trading into the mitigation block here, but more preferably I wouldn't want to see price come here. I would like to see it show rejections from this discount level or a little below it. There is this tiny fair value gap here. It's also a point of interest. Okay, so these are my expectations on the dollar on the higher time frame. Can the dollar go up? Yes, it can. What will be the drawn liquidity? The relative equal highs here, which is a pool of buy side liquidity residing above relative equal highs, this old high, and there is a liquidity void by the left. You can see a lot of sell side imbalances and a buy side inefficiency that will or should be rebalanced. So the dollar can trade bullish in the future, but I would like to see it trade into a discount currently. Okay, so I'm bearish dollar. So I'll go to the weekly time frame and refine this analysis just to see or have more clarity on those outline institutional reference point as I look for confluences. So on the weekly time frame, as we are seeing, we can see that there is a confluence of an order block, bullish order block at 50% of the monthly range. Okay, and we can see a buy side imbalance, sell side inefficiency that price is currently approaching into. I'm paying attention to the discount range. Okay, the discount institutional reference point, that's what I'm paying attention to. Then this is the daily time frame, and on the daily time frame we can still see that there's a confluence of a mitigation block, weekly order block, and a monthly order block at 50% of the weekly and monthly range. Okay, now once price trades into this mitigation block, then I'll pay attention once I see a confirmatory signature that tells me I should go bullish on the dollar, then I will accept the bullishness on the dollar. Okay, so but for now we are currently bearish on the dollar. Why? If you study previously how the dollar has been reacting, the dollar took out external range liquidity residing below here, but it created an internal range. When it expanded to the downside, price traded into that internal range. If you haven't watched the video on internal and external range liquidity, go to the videos on the channel and search for ICT liquidity concept. I revealed these two types of liquidity, internal and external range. You're going to learn about them. We had already mentioned that the internal range liquidity are fair value gaps and other blocks. So you can see here, price expanded to create internal range liquidity, traded into the internal range liquidity, volume imbalance in this case, or fair value gap, and then created another internal range by expanding below the previous external range. Okay, price created another external range, it expanded below the previous external range, then traded into internal range, volume imbalance or fair value gap, or order block, created another external range, traded into internal range. Okay, now price is approaching the current external range liquidity, which is the sell side liquidity. So we are bearish on the dollar. Let's go to the 1 hour time frame and see what is happening on the 1 hour time frame. On the 1 hour, you can see that price took our liquidity above that high, which is more like a stop hunt. Then price gave us an expansion or smart money reversal, creating an internal range. Price traded into that internal range, created another external range, then traded into internal range, took out this external range, then traded into internal range. What are these internal range? Fair value gaps or order block. Okay, now remember that I mentioned when I was teaching institutional reference points that when picking out order blocks, pick the order block with the largest candle body. So you can see here, the one with the largest candle body was the one the institutions traded into. Then we see an expansion to the downside that created another external range, an internal range. Price traded into order block that has a fair value gap confluence. I mentioned that when picking out order block also, when you see an order block with a fair value gap attached to it, that is the most valid order block. Price created another external range. Now price has traded into internal range, and we will like to see expansions to the downside until those outlined institutional reference points are traded into. Okay, so my expectation or anticipation on the dollar is bearish dollar currently. So guys, let's look at the foreign currencies and see what is going to happen. So GbpUsd is my favorite foreign currency that I like to trade. Now you must understand that the relationship between the dollar and foreign currencies is such that they are negatively correlated. When the dollar is bullish, we expect to see bearishness on all foreign currencies or across foreign currencies. when the dollar is bullish, we expect to see bearishness across foreign currencies. Okay, so since we are bearish dollar, we would like to see a bullish GbpUsd. So let's go to the monthly time frame. This is the monthly time frame of the GbpUsd, and what are we seeing currently? We see how price traded into the previous external range liquidity, creating internal range liquidity. What are these internal range liquidity? I can see fair value gap with another block here. I can see breaker or mitigation block. You can call it mitigation or breaker block here by the left that has a fair value gap. I will pay attention to this mitigation block. Once price straight into it, then I would like to see the bearishness return on the pound dollar. Okay, but currently we are bullish on the GbpUsd because we see the monthly candles taking out previous monthly highs. Okay, it has taken out this high, this high, this high, this high. So it's telling us that we are currently bullish. Institutional order flow is bullish on GbpUsd. Okay guys, where is the drawn liquidity? The fair value gap or sell side imbalance, buy side inefficiency of the monthly time frame. There is a mitigation block by the left, confluence of a mitigation block and a breaker. And remember, when I was teaching institutional reference point, I said you pay attention to according to their order of importance. First is a mitigation block, then a breaker. So you can see a mitigation block here and we are paying attention to it. Then you go to the weekly time frame just to refine your institutional reference points. Now on the weekly time frame, you can see that price created an expansion. Price expanded, created internal range, then price retraced into what I call true support. Why is it true support? Because we see an institutional reference point being violated and price returns to it. This is a fair value gap on the left that was violated previously. Once price returns to it, that should serve as support. So you can see price traded into it, and I'm expecting that this will hold this price and induce the next volatility into the drawn liquidity of the monthly time frame. There is a pool of liquidity residing above this relative equal highs, which is buy side liquidity, and we can see sell side imbalance, buy side inefficiency. Okay, let's go to the daily time frame. On the daily time frame, you can see a confluence of a bullish order block within that weekly true support we outlined. The fair value gap violated, price returning to it. We can see there was a bullish order block created within that institutional reference point. So we will like to see an expansion on the 1 hour time frame that creates an internal range so that I will buy the internal ranges. Okay, so look at what happened. Price created an external range. Price was previously in a consolidation. Now we see price expanded, broke structure, created internal range, which is the other block. Price traded into it. I would like to see price expand to the upside. Into what levels? The liquidity pool residing above these relative equal highs, this old high, and you can see here these relative equal highs. This is buy side liquidity. Okay, I would like to see the GbpUsd trade into these levels and ultimately into that monthly levels. So guys, these are my expectations on the dollar and GbpUsd. So you can do these things across all foreign currencies, just using the bearishness on the dollar. Go and analyze the foreign currencies or your favorite foreign currency. It can be Euro, USD, NZD, USD, whatever. Analyze it and expect to see bullishness on foreign currency. So guys, I have good news for you. If you want to learn more about the concept I'm teaching, you want to have something that supports your learning on YouTube. This is a book I authored titled Institutional Trading, a Technical Perspective on How to Trade the Foreign Exchange Market and the Crypto Assets. Guys, this is a self-study guide for becoming a professional trader from scratch, from the very basic level to becoming a professional trader. So if you want to get a copy of this book, if you want to order for the ebook or hard copy, I would like you to click the link in the description of this video and make your orders. Make no mistakes, this is the book you need. Click the link in the description of this video and get a copy for yourself. Until next time, I wish you good luck, good trading.